Hey everyone, just a quick sound check and we can get started once the audio is through. Ta-da. Okay, audio seems to be good on my side, so we are just gonna get started. Welcome back to tonight's webinar session. Just quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so good evening, good morning, good afternoon, depending on where you are from. A couple of updates on the Eurozone CPI. Let's talk about that first, and then we'll cover some of the requests here. So I think there are a few requests on the Euro Pound and stuff like that. Okay, so taking a closer look at the German CPI yesterday. We've got 7.9, that was up from 7.8%. Sorry, it was up from 7.5%. Consensus was 7.5%. So we've got Germany up. I believe France was down today. Yeah, down from 6.1% to 5.8%. And then we've got Italian rates jumping up from 7.9 to 8.4%. The overall Eurozone flash CPI number was up from 8.9. Consensus was 9.1, but we are not looking at any strength coming into the Euro USD. Okay. So with that said, let's focus a little bit on the Euro side. So just to kind of tell you what the overall tone is on the Euro side. Obviously, we've got a sideways market condition on the hourly time frame, and that is basically indicated by a range that widens up like so. We've got this opening up like that. So we are actually going into more of a sideways market condition on the Euro USD. So quick note on that. In terms of support, right now we are looking at the $1 level, the parity level as the pivot for the Euro USD. In terms of upper resistance, we've got 1.0050, and then on the downside we've got 99.50. That's basically the current range for the Euro USD. So everything else in terms of Ichimoku Cloud and stuff like that, it does indicate a potential more of a range-bound market condition to develop in the Euro USD. Again, I think we need to include the parity level. So once we get a little bit of a bearing on the Euro USD, then we can cover the Euro Yen, the Euro Pound. So this is going to kind of orbit around the dollar level in terms of resistance. Obviously, we've got 1.0050. The current cycle does indicate for a little bit more of a nudge up potentially if it does close. It actually has closed above the parity level. In terms of Fib cycles, this is current Fib cycle. It's really going to be small. In terms of resistances, in terms of potential correctional level, we are potentially looking at a cap around 1.0025. The overall tone on the Euro USD is obviously still bearish. It's just that on the intraday scale, we might see a little bit of a nudge up to the upside. In terms of risk reward ratio, if you do want to jump in right now, your stop losses needs to be below 99.75. But again, I would really want to have more of a stop loss on the lower side on 99.50. Doesn't indicate anything else. The dollar yen and the Aussie USD does indicate a potential ascending and descending triangle, but right now in terms of the Euro USD, we are not looking at a triangle scenario. We are looking at more of a range widening scenario. So again, Let me just jump in on the Euro USD on the daily, just to give you an indication of what's going on here. This is what we have been anticipating since Monday. There were basically three potential correctional level in terms of how far the Euro USD could go if the daily does correct itself to the upside. We're not really looking that far. Currently, we are still contained within more of a bearish flag formation. We are still within the channel. So yeah, I might eliminate this one and that one. You know, if it does break above 1.0050, then yeah, I think we're potentially looking at the upper range around 1.01. But overall, on the Euro USD, the tone is this. This is currently flat at parity. We've got pivot at parity. A little bit of a small pivot at 99.50, but we do have this bearish flag formation on the daily. So just the overall tone on the Euro USD actually remains bearish. This is more of a bearish continuation pattern. If a flag does appear, this is currently within 1, 2, 3, 4, 5, 6, 7. We have got until 20 to have that bearish flag formation. So that's kind of the tone on the Euro USD. We do see a little bit of a pickup on the stronger CPI numbers, but doesn't really mean much until ECB. I believe it's next week. We'll see what happens there with ECB. But again, the overall tone for this one is that we do have more of a potential stronger dollar in the coming days or maybe the coming weeks with how the FOMC was. I think this was discussed last week, on Monday. We know, it was discussed on Monday on the webinar, but we haven't discussed it here, so I'm going to discuss it here. Just to touch on very, very briefly, we've got the FOMC being very firm in terms of what they want to do. In terms of CPI, lower CPI numbers, the latest CPI number wasn't enough for them to actually go around and start slowing down the pace of interest rate hikes. So they are actually warning that there could be a potential for a higher, unusually high interest rate hikes. Again, if that's the wording, we are going to be estimating a potential hike of 75 basis points this month. Sorry, not this month. In the month of September, we're still in August, from the FOMC. Okay, so we've got a really, really hawkish stance coming out from the FOMC. As you can see the market here, we are seeing a little bit of a pickup on the Euro USD on the hourly time frame. But again, it's capped at $1 right now, so I guess upper resistance we've got 1.0050. Right now the stochastics it's actually still below 20. It's actually at 19. The slow stochastic is actually at 20.79. This doesn't necessarily mean that this could turn around. It might actually stay below 20, and if that's the scenario, then we could potentially see further push to the downside towards 99.50 on the Euro USD. But the overall tone, again, if you do want to go short on the Euro USD, make sure your stop losses it's either at 1.0 at 1.0025 if you want to target 99.50. Otherwise, it's going to be 1-to-1. Your stop loss is going to be at 1.0050. Okay, so that's the current status on the Euro USD. Doesn't really lean towards anything, which is really surprising when we consider we have a higher CPI numbers from the Eurozone. So I guess inflation there, it's expected. They kind of expected the inflation. I think we've got ECB members speaking out about them focusing on bringing inflation down. So I think it's kind of, the market kind of expect this. They kind of expect a higher CPI numbers, and they kind of expect that the ECB is definitely going to hike. But right now, that's the current status on the Euro USD. It is going to be a 1-to-1 risk-reward ratio on the Euro USD if you're interested in that. Euro is so strong against most other currencies. Why? I just explained it. It was basically the CPI numbers. It was up from 8.9% to 9.1%. The expected number was actually 9%. So yeah, I don't think it's that strong. I mean, yeah, we do see a little bit of a fight in the Euro USD, but it's not really sustainable or anything like that. Next up is the Euro Yen. Let's take a look at the Euro Yen. So yeah, we can see that the past hour, yeah, it does push up a little bit, but it's still contained by 139. We've got support at 138. We've got the pivot at 138.50. So nothing really changed on the Euro Yen. So in terms of strength, if you are thinking, a 20 pip run or 30 pip run to the upside is strong, I don't think that's strong enough or anything like that, considering it's the CPI numbers. So yeah, it's not that strong or anything like that. All right, we got a question on Euro Pound. What's that question on Euro Pound? I thought I saw something on Euro Pound. All right. Do I mind checking on Euro Pound if you have a sell on it? Yeah, that's okay. I'm checking on Euro Pound right now. Why would you want to have a sell on the hourly time frame when it's like that? What's your condition for the sell? Why were you selling it? Why were you shorting it? I think we need to have a clear indication of that. Even going by the daily time frame, it is above the Ichimoku cloud. It created a new high. Obviously, that's going to be today, but it bypassed the 61 and 78.6% Fibonacci retracement. So this is a little bit expected. So yeah, I mean, I don't know what your situation is and why were you shorting it, but if you are shorting it, this is currently your last. You've got until about 86.25 as your resistance in terms if you're expecting it, right? I don't know where your stop losses is right now, but I mean, if you highlight 86, that's where we are right now. It might fail at 86, but if we consider 86, obviously we need to consider 86.25 as well on the Euro Pound, right? So we've got a 25 pip range. If it does go beyond 86.25, if there's an hourly close above 86.25, then that short wouldn't be attractive. I think you need to have a plan on this one. Where is your stop loss? If you're relying on your stop loss on this high here, then you should have been taken out anyway. Right? So on the Euro Pound, is it really time to go for a short? I don't think it's really time to go for a short. It might pull back down a little bit. So if it does pull back down a little bit, you might be looking at this Fibonacci here, just to measure in. This is still valid. We're looking at a bounce from 38.2%. So yeah, potentially we might not see price pull back down again. But if we do pull back down, then expect support to come in at around 85.75. So yeah, you might get a chance to turn things around, but you should have been stopped out. That's all I can say. If you're shorting Euro Pound, you should have been stopped out. In terms of potential range and stuff like that, obviously if we take a look at this one here, we do have a bullish flag on the Euro Pound, at least on the hourly time frame. So yeah, unfortunately, not much to say except that this has actually broken above that flag, so we might actually be looking at a potential continuation on the Euro Pound. Range is going to be small, but again, limit is at 86.25. It should be in line with around 161.8%. Yeah. So there we go. It is in line with 161.8%, going by this hourly fib. So, yep. Either you want to take that risk and have it go all the way to take out your stop at 86.25 or get out now. This is likely going to be headed towards 86.25 before it starts ranging again. So yeah, looks like you don't have a stop loss on this one unless you tell me what the stop loss is and see if it makes sense. But to me, it doesn't make sense anymore. In terms of stop loss, the highest I would have is at 86.25 or maybe 86.30. But yeah, that's the current scenario on the Euro Pound. Yeah, I just explained it. Why is euro falling in relation with USD, where it's strong with other currencies? What is the reason? We've got CPI numbers out from Eurozone, right? Maybe it's not strong enough to go against the US dollar in terms of how hawkish the FOMC is, but it's definitely strong enough to go against the pound, for example. It's definitely strong. It's not strong enough to even go against the euro yen. It's still range bound on the euro yen. So I don't know what the definition of strong is, because I don't see a 30 pip run as strong, but I mean, if we do see that it is slightly stronger, yeah, because it's because of the CPI numbers that we just got on the Eurozone. Okay, let me check on Euro AUD. Yeah, still picking up, still within range. It might continue to go higher. The overall tone on this one is still to the downside. We still do have resistance trend lines on the Aussie USD, sorry, Euro AUD. So yeah, it's not really strong in a sense that it's really groundbreaking strong or anything like that. I just don't sense it. You might potentially see some gains, but it's not really. It's stronger. But yeah, my explanation is simple and it's just very logical. CPI is up. Right, we've got the ECB last week on Jackson Hole. What's her name? It was a lady. I think it was Isabel something. Anyway, basically she spoke out that the ECB is likely going to be hiking interest rate in tune with the FOMC just to bring price stability, and they are likely going to be hiking strongly. There were talks about 75 basis point hike from the ECB. I still don't think that's going to happen. I think we are still going to be looking at around 50 basis point hikes from the ECB. I believe it's next week. So yeah, that's that. As simple as that. So we got stronger CPI numbers from the Eurozone. It's not strong enough to go against the US dollar because of how hawkish the FOMC is and how determined they are to bring down price stability. And they did mention that, economic slowdown or a slowdown in the pace of economic growth, it's a sacrifice that needs to be taken to bring down inflation. Okay, so that's really strong words there coming out from the FOMC. If you didn't get that, that was all on Friday. Those that attended the Monday's webinar got updated on this one, but if not, then you should be joining the Telegram channel so you get updates on Monday as well. Okay, so pretty clear on what's the situation with the euro and stuff like that. All right, let's take a look at gold. I think tomorrow market will come down. I don't think. we could think, yeah. I mean, we could take a look at the market. In terms of market comes down or market goes up, I think every day something goes up, something goes down, right? So, Anand, you need to be more specific in your wording, because that's a very dangerous outlook by just saying, oh yeah, I think the market's going to go down. It doesn't work that way. All right. Any inputs on gold for month-end closure? Is it going to be bearish, testing 1700 or 1750? For once, I'll go for Team Gold. I think we are going to be looking at a potential support at 1700. That's still going to be tested here. We're not really off yet. We do have that support range from 1700 to about 1725. That's for month end. If you're looking at, month end, yeah, I'll guess we'll go by daily. In terms of correction, we still have support coming in around 78.6%. Is it going to close at 1750 month end, which is today? Yeah, obviously not. I don't think we're going to be looking at that push towards 1750 today. Today is the 31st of August. It's the end of the month. Okay, so any inputs on gold for month and closure? Is it going to be bearish, testing 1700 or 1750? I would be leaning more towards testing 1700 at this point in time. The hourly is still below the Ichimoku cloud. It's still following an extension to the downside. There's actually a new extension here if you guys want to go with that. We got 78.6 to 161.8, around 17. you're probably looking at a potential retest towards 1705, 1700 today on the gold there. But if you're planning to go short, your stop loss needs to be at 1725. So do you think it's worth it? I don't know. It's completely up to you. So either you have a short position running at a higher price, but in terms of going short right now, I don't think it's worth the risk there. You're risking $15, $16 for a $5 gain. So I think this is out of the question. I don't think it's a great idea to go in short on gold right now. It's a little bit too late. If you go in short on this breakout to the downside from this level at around 1720, having a stop loss at 1725, then yeah, it's a great target level if you're going to be looking around 1705, 1700. Okay, but if you are planning to jump in right now, I don't think it's worth it. In terms of time, is it time to jump in for a long? I don't like going gold or going long on gold as long as FOMC is hawkish. Simple as that. Okay, so done. Let's move on. Let's take a look at a few key levels here, especially the. Yeah, I'll talk about pound USD. I just want to talk about Aussie USD a little bit here. So we do have price pushing down towards 68.50. If there's a close below 68.50, then we are potentially looking for further push to the downside, potentially closer towards 6,800. If it does break towards 68.50, below 68.50, you might actually be able to get in on a quick short. Again, this would be based on the US breakout. If it is based on the US breakout, then your stop loss needs to be the closest. It's at around the closest it will be around 68.65. In terms of target to the downside, you could be targeting 68.25, but I'll be looking for more of a push towards 6,800 on the Aussie USD. If it does break up below 68.50 and maintains a position below 68.50, okay. Not the Aussie USD that I was actually looking at. It's actually the Aussie Yen. The Aussie Yen has one key level left here, and it could be attractive if you're planning to go short on the Aussie Yen. If it does break below 95, it will break below a significant psychological price level. Then, you know, we could potentially be looking at further continuation to the downside, ideally towards 94.75 or up to about 94.60 to 94.50. Okay, so we are going to be looking at a potential for this one to return all the way towards that range there. Zoom out a little bit, you'll see it there. Okay, so I think what's attractive, it's the Aussie Yen. Right now, if it does break below 95 yen, then yeah, we could potentially see further move to the downside here. Again, in terms of stop losses, since it's a psychological price level, obviously the minimum stop loss would be above 95.25. So if you do plan to go short on this one, make sure it has an hourly close below 95. In terms of stop losses, you might want to have it around 95.30. Target level, you could be targeting about 94.60, 95. That would still give you an okay risk-reward ratio. It is a trade that makes sense. In terms of stop losses, it's not really that huge. Okay. The next one that I want to quickly touch base on is actually the dollar yen. You need to pay closer attention to the dollar yen if you're planning to trade the dollar yen, or if you have a trade on the dollar yen that we talked about that was a swing trade. I think we talked about this last week. This is the current swing trade that's currently running for dollar yen. We've got a potential return towards 130. Obviously, if it does break above 139.50, we do have that potential towards 142 on the dollar yen. So yeah, on the other time frame, I think this is great. We actually have two different patterns here that we could define. Obviously, we do have that resistance at 139. Sorry. So yeah, 139. That's what's capping it right now. Okay, so either you take this as a potential range-bound market condition, or there's actually this. You could identify this as a potential ascending triangle on the dollar yen. Obviously, it has a limit. Our expectation is that if it does, my expectation, if it does break above 139, if there's an ollie close above 139, then I think it's just it makes a lot more sense if you do trade that breakout. Obviously, you have the range of this triangle as a potential target. Okay, but we could do better than that, right? This is about 102 pips. So about there. That's the cut off the estimated range. I believe that's in line with about 140. Okay. So 140 makes a lot more sense in terms of risk reward ratio. Initially, you are going to have about 1-to-1 risk reward ratio on the dollar yen, but as this one progresses, if it does create a new bounce off the support trend line, obviously your stop loss is going to get smaller and smaller until that breakout happens. Okay, so until that breakout happens, obviously this is the stop loss that we have. We are still relying on this stop here because we're not seeing a swing yet. Okay, I will Ganesh Boras. We'll talk about pound USD. Just give me a minute. Once you type it in, I'll go through it. So yeah, do not keep repeating it. I'll go through it one by one. Okay. From a fundamental analysis, is euro is better than pound? Okay, last week we've got pound CPI numbers, right? We've got pound inflation numbers just quite recently, and then we've got the euro numbers, right? So, pound had its days, euro had its days. In terms of is euro better or pound better? Right now, euro pound does indicate that the euro might gain a little bit. Doesn't mean that it's one or the other. You have a preference, right? Either you like the euro USD or you like the pound USD. I think for pound USD we do still have a little bit of a room. Any thoughts on US oil? So yeah, let's go slowly. From a fundamental analysis, is euro better than a pound? I think they're about the same, in all honesty. We've got CPI numbers that's lower in France. We've got Italian CPIs and German CPIs that was higher. So I think you need to take a look at a lot of different stuff. But in terms of which fundamentals is better, both of them are looking at a potential recession. I think fundamentally Germany is not in a good state in terms of the energy crisis that's going there, the potential recession there with the drop in the PMI numbers from Germany. Maybe the UK has a better fundamental at this point in time in terms of the central banks. I think Bank of England, it's more on track. It's a little bit clearer than what the ECB is going to do, because we're still not clear on what the ECB's fail-safe program is that they announced about 2 months ago. So we're still not clear on that one in terms of how they're going to control the bond price, the bond yields there. Okay. Okay, I got a position on silver, placing short. Let's take a look at silver. We haven't taken a look at silver for a very long time. So, you got silver placed a short position on Monday at 1878, stop loss at 1875. Okay, 1878. Monday was there. Okay, we got 1875, 1878, stop loss on 1875. Sorry, 1895. That's your stop loss. You go in short at 1878, which is right around there. And Canadian GDP growth rate quarter reported at 0.8% unchanged. GDP unchanged on Canada. GDP growth rate year on year reported at 3.3%. Consensus was 4.4%. Still growth, so no worries there. Sorry, I'm just reporting on news that just came in. Okay, let's take a look at silver. Taking profit at 1757. Okay. I probably need to go in onto the daily, but right around there. Should I move your stop? Should I move my stop loss to 1850? Right. I think we are gonna take a look at this from the 4-hourly perspective. No, an hourly perspective. That's fine. Okay. Silver. Should you move your stop loss to 1850? I think you should. You should move it down here about 1855 to be exact. It's 1850 key level, about 1855. You need to give it a little bit of a room, and I think 1855 sorry, not 1855, but 1853. So yeah, about 1850. You're correct. So yeah, if you want to move your stop loss to 1850, I think we can identify this the potential resistance here and the drop there as a potential swing on the silver. So I think yeah, you should lock in that profit that you have there. That's quite significant. Not bad. So yeah, I think you should lock it in. Should you go any lower than that? No, I think 1850 should be about right on silver there. All right. Can I check CAD Swiss? Yes, I'll check CAD Swiss. I don't normally trade CAD Swiss. I would really consider it an exotic or than anything else. Oh, consolidation to the market. I want to see what's your view on it. I think it's fine if there's consolidation on the market. There are a couple of reasons why the market is consolidating right now. We have seen that huge movement on Friday. I think that was quite a bit of a shock that was followed on Monday as well. But right now, in terms of consolidation, I think we are looking more of a technical correction here. We've got people that go short, taking off their profit. Obviously, that's going to bounce a little bit. But CAD Swiss, let's take a look at CAD Swiss here. Daily, obviously, we have that resistance at 75. We're still below 75. Should you consider a long or a short on this one here? Because we're actually close to 75. This is a little bit capped, yeah. I think this is capped at about 100 if we do that over here. So yeah, I'm not saying it's a double top or anything like that. I don't consider this a double top. But in terms of how if there's going to be an intraday correction or a pullback or consolidation, there could be a pullback towards 61.8, 78.6 towards that Ichimoku cloud there. You might see price pullback towards that level there. Should you be going short or long? I think momentum does point that the potential is for you to actually go short on the Canadian Swiss. But it's so close to 75, you really want to have your stop loss at 75. But in terms of understanding if there's going to be a swing position on Canadian Switzerland, yeah, it's a tough one. We are looking at resistance coming in at 75. So as long as the daily doesn't close above 75, we're still looking at that as a potential cap on the market. In terms of resistances, in terms of correctional level, it should be around 61.8% on the daily as well. So yeah, going long or short on the Canadian Swiss, I prefer to go short right now, even though it's above the Ichimoku cloud. Momentum does point to the downside. We do have a little bit of rejection around 74.80, but it's so close to 75. If you do want to go short, make sure your stop losses are above 75. Target levels, I think we could be looking at this lower range here where the cluster of resistances turns support. So we are looking at this range of level. So yeah, that's around 74. Is it? Yeah, it is around 74. So risk reward ratio, it's okay. You're not really risking too much, but again, in terms of gain, you might be more conservative if you want to. I think one-to-one risk reward ratio, because we do expect a little bit of a bounce at support to come in around 74.30, 74.25. Okay, and then it might actually fluctuate again. But again, CAD Swiss is not my expertise. I don't really look at exotics. But hey, you want me to take a look at it? I'll take a look at it. If dollar yen today still fails to close above 139, we'll make another deeper correction. As I said, I think for the dollar yen, we framed it on the early time frame. Pretty clear in terms of how far the correction goes. It's very limited in terms of how deep the correction can go. So let me just get rid of this. I don't think we need that. In terms of that, we don't need that. This 135, we need that because that was the key support on daily. If it does fail above 139 and stays within this support trend line, then, you know, by all means, yeah, let it form an ascending triangle. It breaks to the upside. More than happy to look at it. But if it does pull to the downside, I think it's really well supported at 138 as well. So yeah, either you see price does this and then eventually obviously break, or as I said, there are two potential ways to look at it. We could look at this as an ascending triangle, or we could look at this as more of a rectangle on the dollar yen. But it's limited. We've got, in terms of correctional level, it's going to be limited at around 138, at least from an intraday perspective. In terms of, you know, the longer term outlook on this one, it's still going to be capped at around 38.2. I don't expect a correction towards, lower correction towards 137 at this point in time. I just don't see that. I think we do have a lot of support on the dollar yen. Okay, so you guys know my stance on the dollar. I don't like the ideas. I don't like the current idea of going against the US dollar just because of how determined the FOMC is. Yeah, I don't think a lot of people are going to like Euro USD below parity. Obviously, European business doesn't like it because they are, I guess it depends. If they do business with the US, then yeah, I think it's great if the euro is actually below parity. If they're going to get paid in the US dollar, then yeah. It's not a matter of liking it or not liking it in terms of stakeholders. You know, what are the stakeholders? Because if we talk about currency market, there really isn't any stakeholders, is there? Right? It's not really a company or anything like that. So it does take some time to get used to parity, and historically it doesn't last that long. But this is obviously a different scenario. But I mean, if ECB does get aggressively hawkish, then yeah, it'll bounce off away from parity as well. Okay, maybe let me talk a little bit more about the current situation. If you want to know about the whole CPI thing, the FOMC, they're super aggressive because they have a lot of data. They've done ridiculous amount of rate hikes, right? They've done 75 basis points back to back, right? The UK have only done 50 basis points, so the UK haven't actually done 75, right? But if the Euro USD does 75 all of a sudden, that's going to bring the euro up. Why? Because the perception on the market will be that the ECB is determined enough to risk the bond market, and risk the potential of creating a recession in the Eurozone by hiking 75 basis points, right? That's the thought right now that a lot of, not a lot of people, I think the majority of people has that thought, right? About 75% to 80% has that thought. I don't have that thought because if we take a look at it from a fundamental perspective, it's a huge risk for the ECB to hike by 75 basis points. If they want to hike big, I think 50 basis points is big. That's large enough for the ECB. So I don't know where the consensus comes from. Obviously, some economists are looking at that, but I've been going through the numbers, and I just can't pinpoint where that 75 number came from. Is it more from people are concerned about how the FOMC is hiking quickly, rapidly to contain inflation, that the ECB needs to do it faster than the US because the US failed to contain inflation within a set period of time? I don't know. Maybe that's the perception, but the consensus does point to a potential for 75 basis point hikes from the ECB. Yeah, I mean, we take a look at the Euro USD stuff, right? We talk about this a lot. We obviously have that support at 99 cents, right? It's obviously still unbroken, but yeah. Do keep in mind, if it does goes back below 99.50, breaks below 99, then we could actually see more of a quick slide towards 97. 98 is unlikely going to stop it. So yeah. From experience with the Aussie USD, eventually it will stay below parity for a longer period of time. I think we had about 6 to 7 months on the Aussie USD above parity with the US dollar. So again, we're looking at that scenario here. The parity level, again, as I say, it's going to be a unique key level. It's something that not all currencies are going to experience. As I say, in the past 15 years, you know, the only currency that does this is the Aussie USD. So yeah, so this is unique, right? I'm not saying that this has continued the downtrend. Right now, it's really pushing. It's really testing that $1 level there. Okay, we've got a close above parity yesterday, but keep in mind it failed to close above parity for the past week. Right now, if it closes below $1 level, again from the daily perspective, the momentum still stays below 20 level. It does indicate a potential for the trend to actually continue to the downside. So again, I wouldn't jump in on the Euro USD right now. If you're a swing trader, I wouldn't take that, you know, speculative position. I did take it when it first touched parity, but right now we're not talking that, hey, it's at parity level. We're not considering it's at parity level. It actually dipped down 1 cent below parity, so we're looking at 99 as more of a key support right now rather than the parity level itself. No, I'm not liking Euro USD for a swing long right now, just because it's still within this channel right now that we have. So the current formation that I'm looking on the Euro USD is that this is a bearish flag, right? Nothing else. I don't see any other. I don't see any other patterns. I don't see any triangles. I don't see anything else. All I see on the daily time frame is that I see a potential for a bearish flag. In fact, it's currently forming. If it does break below 99.50, then yes, we are potentially looking at more of a downtrend continuation on the Euro USD. So just be mindful of that. Okay, I don't like going against the dollar at this point in time. So let's take a look at the dollar Swiss. Dollar Swiss, daily is okay. We are transitioning. This one might be a little bit easier. This one might actually be a little bit easier. So, dollar Swiss, just let's wait for a pullback towards 97.50. How's that? Okay, any pullback between 97.50 to about 97.60. That high was at 97.60, I believe. Yes. So we're looking at this as a potential pullback level on the dollar Swiss right now. Wouldn't want to go long on the dollar Swiss right now because it's closer to 98. If it does break above 98, then I would just leave it alone. But if it does pull back down a little bit towards 97.50, I like that trade idea. If it does pull back to the downside. So yeah, we don't have an ascending triangle on the dollar Swiss, unfortunately, but we still have a trending scenario on the dollar Swiss. So we might see a little bit of a correction. I could even be at 97.75. Doesn't matter. But one more pullback to the downside. That's where you want to jump in on the dollar Swiss, right? Fib on the hourly time frame. So yeah, we could potentially be looking at a potential return to 38.2 to about 61.8% max. But if it does pull back down, I much prefer to go long when it does pull back there. So I'll wait. I'm not in a rush, but in terms of stop losses, if it does bounces off, you might want to have your stop loss at about 97.25 ish. Right, and then you can go for a new extension. Obviously, if it does break this, if it does correct towards 97.50, we could potentially project there, right around 98.40, 98.50. Sounds about right. Okay. So yeah, I would wait for the dollars to pull back before going in long. I wouldn't want to go short against the US dollar. So I don't like the idea of going short the US dollar. It's just too much risk right now. So now central bank wants to fight inflation numbers, even there's a recession and more unemployment. Yep, that's the whole Jackson Hole. Let me read out my notes that I posted on the Telegram group on on Friday. Okay. As expected, the recent drop in CPI is still not enough to make the FOMC pause or stop interest rate hikes. In order to achieve or restoring price stability, the FOMC understands that the economic slowdown is a sacrifice that must be accepted to restore price stability. So yeah, it will take several months of reduced inflation before FOMC slows down the pace of interest rate hikes, and they warn of unusually high interest rate hike in September. Okay, so they know there is. So the FOMC has not. The FOMC stance has not changed. In fact, they're doubling down because they actually acknowledge that the risk of a recession and slowing economic growth is still there, but still prioritize price stability. Okay, the way they look at it is this: if inflation keeps going up, the economy is going to be in a much better. The economy is going to be in a much worse state than not going through that potential recession. They don't say recession. Okay, I think the Eurozone and the UK mention recession. The US still classify that as a slower pace of economic growth. Okay, so it's not really a recession. So yeah. Okay. A lot of requests tonight. Let's talk about Pound USD. I think we pushed this back a little bit just now. But let's talk about Pound USD. Pound USD, we talked about this on Monday, right? We talked about that potential bearish flag there, the one that looks like what it's forming on the Euro USD. So let me flip this with Euro USD. Yeah. Notice the similarity, just a few days late, maybe. So that's the Euro USD on the current state. That's why I don't want to go against the dollar at this point in time. The Pound USD has actually broken below that flag, and this is currently at the level that I mentioned on the Monday's outlook. So someone that was asking about, was spamming on Pound USD. Ganesh, I gave that information out on Monday. We were looking at the potential returns lower towards that 1.16. We have touched that 1.1614, which is the 127.2%. It is currently below 1.1650. Can it go lower? Yes, it could potentially go lower. If it does close below 1.16 tonight, right? It could go lower towards 1.15 and potentially 1.1450. So we are looking at still a downtrend on the Pound USD. So on the early time frame, obviously what you're looking for is that you're looking for a correction that doesn't exceed 78.6%. That correction would come in at around 1.1675 max. So you're looking at potential rejection at around 1.1650, 1.1675, which is around there, right? Okay, so do you want to go long? I don't want to go long because there's a lot of risks to the downside. Any bearish sentiment today in the market, I think we just got ADP numbers, right? Doesn't even matter in the market, but just for out of curiosity, what was the ADP number? ADP expectation for ADP was 300,000, came in 132,000. You know, I really think ADP is so irrelevant. Okay, pound USD, it might correct itself to the upside and then go down. I don't want to go long. I much prefer to go short if there's a rejection there, but obviously we need further confirmation and stuff like that, blah, blah, blah. Since our stop losses, we could potentially have our stop loss at above 1.17. In terms of target level, obviously we are looking at 1.16. So yeah, risk reward ratio is much better if you wait for that opportunity to pull back. If you do want to go long right now, again, it's a matter of preference. I just don't like going against the trend. I just don't like going against the dollar right now. But if you do want to go long, this is going to be your target level. It's a 1-to-1 risk reward ratio. All right, if you think it's fine risking 35 for 35, go for it. You know, just let me remind you, the risk for it to fail, it's higher than the risk for it to actually gain. Okay, so it's completely up to you, but I just don't like going against the US dollar at this point in time. Okay, so pound USD is really, really simple. We talk about this trade on Monday. So if you haven't joined in the Telegram channel, you should be joining in. Any thoughts on US oil? Okay. Can you be more specific? What's my thought on US oil? Are you looking for more of a bear scenario or whatever not? If you want my general thought on US oil, let me bring this up over here, okay? US oil, I believe I have it here. So that's done. Okay, we got support at 89 to 88. We still have that. That's basically the 78.6 to 61.8%. In terms of whether oil it's going to go lower, technically it should. Technically it should, right? From a daily perspective, I think we do have that momentum. I think we just break the support trend line anyway. No, actually we haven't broken any support trend line because we are actually still going by this. Yeah. Anyway, probably wouldn't want to use that support trend line. This fib is done. We are below 95. We're below 89, 88. No, we haven't gone below 89, 88. All right. Here's the thing. We talked about this about a few weeks ago, right? 89, 88 is going to be a key level. It's going to be obviously a deciding factor on can oil break down lower. If it does break below that 89, 88 range, then I think oil could go lower. How far can oil go? It could go down to about I believe 82, 80, 83, 82. It would be around this range, 82, 83. Ta-da! Which was a cluster resistance and support area from last October to January 2022. All right, so yeah, that's my take on oil. If you want a swing position on oil, I wouldn't recommend going in short yet. If you're looking for an intraday position on oil, then obviously you're looking at support at around 88, 89. In terms of how far it's gone, I think we have broken a flag here. So yeah, you know, if I see something that forms a flag, you know, I take it really seriously, because any flag formation that breaks, it's a really significant break. We do have a little bit of support right now. You know, you could attempt to go long if you want to, but momentum hasn't crossed over yet. Just make sure your stop losses is below 88 if you do want to go long. In terms of target level, we're still looking at a potential of within a retracement range on the hourly time frame. So you maybe want to limit your target to about 91. Okay, that's about fair. Risk reward ratio it's about 0.91. So risking about $1.64 for $1.50 potential target. If it does break above 91, or you know, if the momentum crosses over, then yeah, we could potentially see, you know, this one coming towards 78.6. It could get really attractive. But I think what the intraday market is going to be looking at is actually potentially coming back towards this range here. So yeah, that's between 61.8 to 78.6% to 100%. That's the potential range of target you have for oil. Okay, so in terms of swing trade, do I want to go short oil? No, I don't want to go short oil until there's a daily close below 88. But if you're planning an intraday long on oil, you could. Just let me just warn you, it's not something that you can target like 95 or anything like that. Just target the retracement, because overall it's still within a downtrend. If you target around 91, then yeah, the market could do that again. Okay, so potential support at around 91, that's going to be your key level. So let me just highlight 91. You'll notice it because 91 was previous resistance, turn support. Let me just get rid of that. And let me just get rid of that. You'll see 91, right? The significance of 91. So if you do want to go long, by all means, but bear in mind, the market might find resistance at around 91. So you got either you attempt to go long right now or wait for it to get rejected at 91 and then go short. So you got your options, obviously. That's my view on oil. So I'm not taking the current long. If I'm doing the trade on oil right now, I wouldn't go long. I would wait for that short. But some people might not be patient enough to wait for that short. Make sense? Yeah. I wanted to know how next to fail. Oh, you're on sell at 891. Okay, so say. Vinayak, I think we are looking at more of a swing trade scenario, yeah? Yeah, I think, look, the key is going to be 89, 88. If it does break below 88, then there's a lot more room to go. So about 82, 83, which makes sense, right? Just make sure your stop loss are adjusted as you gain, because you don't really want to see on the market rebound on this one. It's that technically on oil it has been going down, right? But the whole energy crisis thing, it's not done yet. But I think it's okay if you go short on oil, even on a swing. If you don't plan to hold it for 3 months or 6 months, that's okay, as long as you don't plan to hold it until winter, because we might see more of demand to flow into the market during the winter periods. We talk about gold, so you can rewind gold. We are looking at a potential return or retest of 1705, 1700 for gold. Yeah. So yeah, we are currently at support range right now. It's a little bit too short to go. So yeah, you see that flag again here. So I'm not kidding with the Euro USD, guys. I don't really like the idea of going against the Euro USD because we've been getting flags that got broken here and there. I think the only thing supporting the euro right now is the CPI and what the ECB members. I forgot her name, but it was Isabel something. She spoke on during the Jackson Hole Symposium with the Feds there over the weekend. So yeah, I think it's hyped up a little bit. It might go sideways again. We take a look at this on the early time frame. The range has actually widened up on the Euro USD. It's actually opening up. So we are looking at more of a choppy market condition with market pivoting around one. Let me just bring back the Euro USD. Here we go. There. Okay, so Euro USD, we've got market opening up. We've got resistance at 1.0050. We got support 99.50. Pivoting at $1. If it does break above 1.0050, we've got 1.01. Sorry, yeah, we got 1.01. To the downside, we've got 99. So if you want to trade the euro, unfortunately, until we've got news coming out from ECB or anything like that, it's going to be if this breaks that, it will go there and then do that. And this was a similar scenario like about 2 weeks ago when someone said they lost something on the Euro USD, but there was no trade taken. But that's basically the current range. So pivoting at 1. Okay. Break to the upside, break to the downside, irrelevant. It's still actually within a range, so it doesn't go anywhere. It is a 100 pip range, so every 50 pips, it's going to be a key level on that. Make sense? Great. All right, that's a request for Bitcoin, and I think that would be the last one we'll take a look at tonight. So Bitcoin, let me zoom out a little bit. Did I take a look at Bitcoin here or the other one? Sorry, I'm just trying to find my Bitcoin, the one we talked about on Monday. Okay, so Bitcoin, we are looking at around 20,000, right? This is irrelevant. All right, so if we are within range of about 20,000 right now. It's going to pivot at 20,000. In terms of can it go lower and stuff like that, potentially yes. Again, if we take a look at what the market is doing, let me zoom in and let me show you why I don't like the current formation. If there's flex, this is actually currently forming 2 flex right now. We broke through this one. Yeah. We are currently within this one. Okay, it is a little bit flat, but if it does break that, i.e. if it's consistently below 19,500, then yeah, we could be looking at a potentially deeper pullback towards maybe the 1800 low on Bitcoin, which is about there. Okay, so there is that potential scenario. This is below 20. Again, it carries a lot of risk. If there's a daily close below 1950, it could really slide. Okay, but it slides because there's bearish sentiment in the market, because there's a little bit of a risk aversion. Because for some reason, I don't know why, cryptocurrency traders are looking at the FOMC or whatever, right? I'm not quite sure, and I say it every time we talk about Bitcoin. There shouldn't be any correlation between what central bank does and what a cryptocurrency does, because the whole point of cryptocurrency is to be unregulated by the central bank. So yeah, go figures. Okay, so that's on the daily. Let me go through this on the hourly time frame. What could we look at on the hourly time frame? We do have that choppiness. We do have a resistance trend line. We're not forming any triangles and stuff like that. We are actually within a triangle. So yeah. So we do have a resistance trend line that's capping the market. Okay. At the same time, we have this within that. Okay. So yeah. Can we classify this as potentially within a triangle? Yes, we could classify that as within a triangle. If it does break to the downside, i.e. if it does break below 20,200, then yeah, we could potentially see that move lower. In terms of stop losses, obviously a lot of choices for stop losses, but you really want to be looking at about 20,500. In terms of target level, you are going to be looking at about 20,000. Is it worth the risk reward ratio? Probably not. It might go lower. You want to go for 1,800. Just for now, as long as we're actually within this channel here, just don't target anything outside of the channel. Okay, so it really is time dependent. As time goes by, your target level is going to shrink. Okay, but again, that's Bitcoin. It's going to pivot around 20,000. There's not much clarity on Bitcoin. I've been following the crypto market for the past week. It has been choppy. We've got a day up, a day down, that kind of stuff. So it's going to be really tough. But I mean, if you take a look at it from a daily perspective, let me just warn you what we're looking at. Okay. We're not really done. We're not really clear yet in terms of how far how far Bitcoin can go. Okay, we've got 19,000. You want to count 19,000 in, but yeah, ultimately, if it does break and there's momentum enough for it to be pushed toward 1,800, if the FOMC hikes by 75 this month, then yeah, I don't like the idea that it's correlated to what the FOMC does. But in terms of risk aversion in the market, as I said a few months back, crypto isn't fun anymore. I think the hype has died down. All right, people got smashed when the whole crypto market crashed. So, demand for it, I don't see a lot of demand for crypto right now. I just don't see that hype in the market anymore. So you're still looking bullish for dollars. So even tomorrow, NFT percent could make trouble for the Fed. Yeah. See the FOMC meeting minutes was detailed, right? But in terms of the whole Jackson Hole thing, the speech from Jerome Powell is actually pretty, it's too, how should I put it? They pretty much confirm that potential 75 basis point hikes because they warn of unusually high interest rate hike. That would scare off the market, okay? That would really scare off the market. Now, if you take a look at the NFE numbers, we've got the NFE numbers last month. That was really high, right? It was higher than forecast. Yeah, let me just pull this out right now on the numbers here. Last month's number, the expectation was for 247,000 gain. It came up with 528,000 gain, right? So the expectation for this month, it's 295,000. Okay. Unemployment rate last month fell down from 3.6% to 3.5%. What if we have another surprise? Because if we talk about surprise here, anything above 295,000, it's already a big enough data for the market. If it comes in at 250,000, it's not really significant to say that the employment market or the job sector it's really shrinking. The gain is not strong enough because it really isn't the point here. Because you need to take a look at the average hourly earning that was actually up, right? This time around, the unemployment rate is going to be the factor, the key factor here. What if there's a surprise unemployment rate drop towards 3.4%? That's just going to push Fed to hike interest rate without any worries. You know why? Because it cannot be an economy cannot be classified as a recession if the unemployment numbers keep dropping down. See, that's the thing. That's why the US is actually avoiding the word recession. So we have a concern for global recession because some countries are worried about that recession they had and they are using the R word. But the US hasn't been using that R word, right? And the FOMC is so determined to hike and maintain price stability at the cost of economic growth. So I don't think the NFE number is going to matter much. We've got when is the meeting anyway? Let me just check. I believe it was actually mid. ECB's meeting is next week, right? The consensus was for a 75. No, that's Canadian. I'm sorry. What's the consensus? Bear with me here for a second, okay? Just bear with me here. I'm looking at that consensus for you, so you guys have a little bit of a picture here on what's going on. We've got ECB interest rate decision. The expectation is for a 50 basis point hikes. To 1%. Yeah, the forecast is towards 1% from 0.5, right? Is it 0.5? Sorry guys, let me just double check this because 0.5, yeah, it's 0.5. The expected move that ECB is going to take is actually 50 basis points, right? I don't know, so I don't really know where that 75 basis point comes in. The FOMC's meeting, it's good. UK is actually going to be September 15th. Then that week after that is going to be FOMC, I believe. Yep. FOMC is going to be on Thursday, September 22nd. That's when they're going to be hiking rates. Okay. So hopefully that clears up a lot of stuff. If you guys are wondering where the euro, why the euro is stronger against some of the euro pairs, but not stronger against the US dollar, I spent about 15 minutes talking about that earlier in the session. If you just jump in, do rewind towards the beginning of the session and catch up there. Okay, but I think we covered a lot today, so we can wrap it up for tonight. Good luck with your trades. And I'll see you on Friday. We are going to be talking about market conditions on Friday. That will be the same time as this webinar. It's going to be on Friday, okay? Thank you all, and I'll see you soon. Yeah, and that's a little reminder again for you all. Octa FX doesn't offer any services like that, and I don't. So anyone that, uses my image likeness or Octa FX image or likeness and offer, investment accounts, we don't do that. Offered paid training, don't do that. And for me, I don't offer any signal services or any bot trading, so whatever not. So be careful. There are a lot of scammers out there right now. Okay, so stay safe, guys. Don't do that.